just count me in, Sarah.
Uh,
Good. All right. Hello and welcome to The Public Good. This is Sam Magavern from the Partnership for the Public Good, or PPG, which unites 277 community organizations working to build a better Buffalo. Delighted to be joining you every Tuesday at 1 p.m. on Facebook Live and Tuesdays at 7 p.m. on WUFO Power 96.5 FM and Mix 1080 AM. Today we'll be joined by James Cutler from the Good Neighbors Credit Union. We'll be talking about credit unions, about issues of banking the unbanked, getting some good advice about what kind of checking account works best for people, all kinds of interesting financial education coming your way. Don't forget to follow PPG on Facebook and Twitter, and of course you can always get great information on our website, ppgbuffalo.org. The Public Good is sponsored in part by Univera Healthcare, real people who really care. Video from our shows can be found on our Facebook page and on our YouTube channel. A couple of quick announcements before we get. El Museo is looking for Buffalo-based visual artists, illustrators, and designers to be part of a project called Your Utica Station. 3 artists will be picked to participate in a temporary exhibit at the NFTA Utica Metro Rail Station this fall. Artists of color, emerging artists, and transit riders are strongly encouraged to apply. The deadline is Tuesday, July 31st. Visit elmuseobuffalo.org for more information about the Your Utica Station project and how located into the city of Buffalo. Currently, the Office for Persons with Developmental Disabilities is not on public transit. It's, I think, about 2.5 to 3 miles away from the nearest transit line, and the advocates are calling for it to be relocated in the city of Buffalo on a public transit route as soon as possible. That is happening July 26th, 10:30 a.m. Folks will be taking the bus out and marching and rolling along to OPWDDD. Visit the Facebook event page called ADA Day March for Accessibility for more information. And lastly, you can join the Buffalo Information Sharing Collective and others to learn how to invest in your block, your neighborhood, and yourself. Speakers will walk you through the process of buying land or property from the city's foreclosure auction. That is taking place July 26th at 6 p.m., and it will be monthly until the city's foreclosure auction in the fall. With that, I want to welcome James Cutler. He's branch manager for the Good Neighbors Credit Union to the Public Good. James, thanks for being here today.
Thanks for having me.
All right, for folks who are not familiar with Good Neighbors, just tell us a little bit about your credit union.
Yeah, Good Neighbors Credit Union has been around for about 60 years. It started as the Lancaster and Depew Teachers Credit Union, focusing on obviously serving Lancaster and Depew teachers. About a little over a year ago, we changed our name to Good Neighbors Credit Union and changed our charter to what's called a community charter, meaning we're open to serving anyone who lives, works, goes to school, or worships in Erie County. So we are a nonprofit, cooperative financial institution open to everyone who lives and works in Erie County.
All right, and your branch that you manage is on Connecticut Street on the west side of Buffalo?
That is correct. It's on the corner of Connecticut and Normal in the Horse Feathers building. It's a converted building that has apartments, a restaurant, cheese shop, a number of small businesses, and the credit union as well.
So when you're explaining to someone what a credit union does and how it differs from a bank, what are the sort of basic things that people should know about credit unions?
And the most important thing to know is ownership. Right? When you want to find out why things happen or how things happen or who's going to benefit, it always wants to know who owns it. And the biggest difference between a bank and a credit union is a credit union is owned by the people who deposit money in the credit union, while a bank is owned by anyone who buys stock or is an investor in the bank. So the job of a credit union is to provide the most value and the most benefit for its members or the people who deposit in the credit union, while a bank is trying to provide as most value or benefit for those who invest in the bank through stock.
And so how does that play out in some of the sort of day-to-day aspects of doing banking? So if someone's trying to decide where to have a checking account, where to have a savings account, where to go for a mortgage on a home. How does that difference sort of manifest itself in the way that you operate as a credit union being owned by the people that you serve?
So all the day-to-day conveniences that you have in a bank, we strive very hard to provide the same level of convenience. Online banking, mobile app, checking accounts, savings accounts, debit cards, credit cards, car loans, all of the financial conveniences that you have with a bank that you see day in and day out, we offer basically the same types of products. The difference is we can usually do it at a much lower rate or lower fee because we don't need to take money from you and pass it on to somebody else. So if you take a look, within New York State or nationally, they do these studies every quarter, and consistently you will see credit unions have lower interest rates on loans, lower fees on any products that they offer, and usually higher rates on deposits at the credit union. When you don't have to take a bunch of your money and pass it on to an outside investor, we don't have to charge high fees.
So how long have credit unions been around in this country?
In this country, roughly 100 years. They started in the mid-1850s in both urban and agrarial parts of Europe as a way of self-help. If you were an artisan in the city or a farmer in the country, a bank didn't serve you. They didn't want to take your deposits. They weren't going to give you loans, especially these small dollar loans that you would need to get. So fast forward into North America. First credit unions emerged in Canada and then in Massachusetts and New England, and they started surrounding employer groups, textile workers, manufacturing firms, and Edward Filene, the founder of the Filene's department store, was one of the key people to really push credit unions forward, invested a lot of his own time and money into creating what we now know as a credit union.
So as a credit union, you're competing against banks, essentially, for customers' business. To hear you describe it, everyone should go to credit unions because you're able to provide higher interest rates to pay out to people and lower interest rates on loans. Why do banks still exist? Why do they not just exist but dominate the market? How have they managed that trick when there's such a good competitor in credit unions?
Mostly through scale. Banks are so large that they are everywhere. Their advertising is everywhere. Their branches are everywhere. Their lobbying is everywhere. So they are very good at knowing, what makes people make decisions. And oftentimes what makes us make decisions is not always what's in our best interest. So banks, are very good at what they do. And, there are times that banks do serve markets and serve, areas that, credit unions can't based on scale. But for, the average everyday individual, credit unions most often provide a better alternative than a bank.
So let's talk a little bit. We've done research at PPG about the problem of people being unbanked. And by unbanked, we don't mean that they're going to credit unions. We mean people who don't have a checking account, don't have a savings account, don't have good access to credit, and as a result, they're relying on check cashing services, on payday loans, and refund anticipation loans, on pawn shops, on rent-to-own stores, that whole alternative financial sector that's charging them really high rates. So a lot of people's paychecks are flowing out into just the privilege of receiving their money and spending their money, and they're really not getting much of benefit for that. They'd be much better off going to your credit union. What are some of the challenges of helping people move from the alternative financial services sector into the mainstream, whether it's a credit union or a bank?
And some of the challenges from the bank or credit union's perspective is doing so in a way that is, if you're a bank, we call it profitable. If you're a credit union, we call it sustainable. But you have to be able to at least pay your bills in order to provide these services. And a lot of times, it costs a lot of money to just have basic services, to have a debit card and manage the fraud and have a call center and have a website and have a mobile app and to be able to provide the services that everyone expects to come along with that. And if you're not charging fees, how is it that you pay for
Right.
these services? So
Right.
alternative financial services pretty much was a market solution to saying, how can I provide a one-time transaction to somebody at a fee that's going to make money for the financial services provider, and the person using those services gets their money even though it costs a lot.
Yeah.
So overcoming those challenges, we just need to be creative and say, how can we provide these solutions to individuals, which manages risk, but provides the solutions that they need.
So let's say that I'm someone who has a pretty low income, sporadic, my hours are not that regular, and I've been burned in the past. I had a checking account and I overdrafted it.
Mm-hmm.
I got hit with big overdraft fees at my bank, and so since then I haven't had a checking account. I walk into your offices and say, I kind of want to start a checking account again, but I've been burned before, I'm fearful. What kind of advice would you offer to me?
Yeah, there's really three things that you want to look at. First, understanding what the checking account is and what you're using. Just like any product out there, it can do good or it can do harm. Right? If you buy a car but have no idea how to drive it, you can do a lot of harm.
Mm-hmm.
If you open up a checking account and don't know how to use it, you can do a lot of harm to yourself or to the bank or credit union where you opened the checking account. So number one, know what you're using and know what you're signing up for. And that's really where the staff and the credit union or the bank need to be very helpful in helping you understand what is all the fine print, trying to make it very simple so that this product is going to help you meet your needs. And not every bank or not every credit union has the product that's going to be right for you. There are some credit unions who might have a checking account that's not good for you. There are some banks will know the branch managers and ask questions. Say, hey, this is what I'd like to do. How do you recommend I be able to do that?
Mm-hmm.
This is when my paycheck comes in, or these are my financial circumstance. This is what I'm trying to accomplish. How can the bank or the credit union help me accomplish that? And let your employees at your credit union help you, because that's what we're here for, is to find those solutions for you. Just like if you walk into a car dealership, same thing, and you say, I want a car. Well, you can be driving in the Buffalo winter, or you're going to be, racing in California.
Yeah.
And the type of car that you're going to get is going to be very different. So make sure you know what you're getting, how you're using it, and ask for help.
Let's stick with checking for a minute. So what different kinds of checking account do you offer at Good Neighbors that you would want to explain to someone in that situation?
We offer one type of checking account. It's a checking account. We don't want to make it complicated. We try and make all of the basics mostly free.
Mm-hmm.
So the only minimum to become a member of Good Neighbors is to live in Erie County or work in Erie County and put $5 in a savings account. That $5 is your share or your ownership of the credit union. That's like buying stock, and it gives you voting rights in the credit union. After that, the checking account is free, the debit card is free, the online banking is free. There's no minimum balances, no monthly transaction requirements, no hoops to jump through to keep it free. So we just believe that you should be able to put your money in and take it out as easy as possible, and we try to not charge any fees in helping someone do that.
So put a $5 at least in a savings account, and then you'll automatically get a checking account? Is that what you said?
Yep, so the checking account is optional. So the savings account is the minimum requirement to become an owner. We call it your share account.
Yeah.
Essentially, you need to buy $5 worth of our stock. Right? If you want to close your account, you get that $5 back. It's not a fee. But once you have that ownership and that membership, then it's up to you whether you just want to use a savings account, whether you want to access a loan, a credit card, a credit builder account, a checking account, a debit card. What services. Might not be able to read or speak English. So using online banking is not an option. So we try and figure out, again, that's why we say ask your banker or your credit unioner, what is the best way for me to accomplish these things? Because it's going to be different for everybody.
Do people really need paper checks for anything anymore? Is there, are they kind of going out with the dinosaurs, or is there like a ongoing role where paper checks are important for something?
There are some instances where they're convenient. Personally, I have a starter book of 40 checks, and I might write one a year. But I just have it just in case there's those times where you need to pay for something, you don't have cash, you don't want to run to an ATM. If you want to send it in the mail, right? You don't want to mail cash. So there are the few occasions where it does meet the need. There are some people who again use them regularly, pay the rent with a check every month, which might be a better version than paying cash. At least you have the check. And the bank has a copy of the check. We can log in, see, okay, your landlord cashed the check on this date at this bank. And when he goes to court saying you didn't pay your rent, we can say, we do see you cash this check. Is this your signature endorsing the check? And we can help provide that documentation.
And that's a good example of a bill that you probably can't pay with a debit card. Cause
some landlords do accept it. Again, the bigger companies, they'll have online portals to pay your rent. But that's, again, up to each individual landlord and how they accept it. Some landlords only want to accept the check. And so sometimes they do come in handy. But they are definitely less and less important in today's society than they were a while ago.
Now let's say I'm concerned about overdrafts. I've been burned by them before, and I say, James, whatever happens, I don't want any overdrafts. What advice do you have for me then?
We walk through all of the options. So most people don't know they have the right to opt in or opt out of overdrafts at varying stages. With your debit card, you have the right to say, if you go to use your debit card at an ATM or in the grocery store and you're trying to spend $125 with only $100 in the account, do you want that card to go through and receive an overdraft fee, or do you want that card to be declined? There are additional times, like let's say you give your debit card or your checking account number to National Grid and say, hey, go in and take my electric bill on the 3rd of every month. You've pre-authorized them to take that money. So let's handle it a little bit differently than a one-time transaction. But no matter what, we can walk you through all of these scenarios and say, what do you want to happen in each scenario? Do you want your debit card for one-time purchases to be accepted or declined? Do you want recurring authorizations? Like, let's say it's your car insurance bill. A lot of people will say, you know what, actually I do want my car insurance bill to go through because if it gets returned, the other company like Geico charges me a fee. You know, we still do get a fee at Good Neighbors for putting through a bad payment. So you get 2 fees and the bill's not paid. So a lot of times people say, all right, just let it go through, my account goes negative. In this case, you know, I will take the overdraft fee even though I don't want to.
Yeah.
Then we have other options, like you can automatically link your checking account to your savings account. So if you write a check and you forget about it, but you have the money in your savings account, we'll automatically transfer that money over for you without a fee. There's not many places left that do that. Almost every bank or credit union still charges a fee or won't even do that. For us, it's your money just because it's in a different account. We're not going to charge you a fee just because you forgot to transfer money.
So if you have a savings account, that seems like a really good option.
Yep.
If your checking account gets too low, it'll just automatically pull from the savings account. If you don't have a savings account and you really don't want that overdraft fee, you can tell Good Neighbors Credit Union, and this is true with any bank as well, right? You can say, don't process the charge if it's going to result in an overdraft fee.
Right.
It's funny to me that banks call it overdraft protection when what that means is that they will process it and you will get an overdraft fee. I feel like overdraft protection should protect you from overdraft fees, but it's the opposite. So I don't like that. I don't like that terminology, but.
Yeah, so it's a product that originated with, I will hope, good intentions. You know, so it was called protection because, you know, let's say you're writing, you know, your mortgage payment, and you write the check, and you don't want that mortgage payment to bounce because you made a mistake in balancing your checkbook or something came up. So they called it overdraft protection as a way to say, you know, the idea was, you know, before debit cards and before you charge $2.99 coffees on a regular basis, that if you did present a check for your mortgage or for something important, you don't want that check returned, you know, so the bank will do you a favor and allow that to go through. But in today's world, we use transactions so often that it turned into a fee-generating machine for banks. And there has been all kinds of lawsuits and legislation around it. You know,
They're making a lot of money off
lots
these
of
overdraft fees. And
lots of money.
I think the average bank overdraft fee is, what is it? Is $30-some or?
Yeah.
I know
So-
the big local banks. I know at least one of them. The overdraft fee is $36.50 or $38 or something like that.
So most of them are up to almost $40. So on New York, as of the end of the first quarter, the average bank in New York's overdraft fee was $33.45. The average credit union's overdraft fee was $27.83. For a difference of about $5.62 per overdraft. So a credit union's going to charge you an overdraft fee as well, but we try and do it in a way that, again, we're not trying to maximize the amount of money we can make off you just because you make a mistake.
Yeah.
Another option would be to look into what's called a personal line of credit or an overdraft line of credit, which is like a loan which is linked to your checking account. So if you were to overdraft your account, it automatically kicks in a loan. It says we're going to borrow this money to cover it and you'll pay it back with interest, but it's not going to be at $25, $35, $40 every time you use your card. The biggest problem we see is someone either doesn't know their account is negative or they do, but they don't have a choice. They think they have to spend this money, they have to buy groceries, they have to pay for something for their kids, and very rarely do we only buy one thing per day. So if your account goes negative, and you don't know it, let's say you don't know it, and then you wake up, and most average Buffalonians, West New York, what do? They go to Tim Hortons, they buy a coffee for $2.99. Well, add $35 to that fee. And then you drop your kid off at school, and then you need to go to get gas. So then you fill up your gas tank. Well, there's another $35 in an overdraft fee. And then maybe you go into the gas station, you buy a snack or a soda, and there's another overdraft fee. So most people end up getting them in bunches. And that's where most people fall behind on their accounts. It's not the one overdraft where they made a mistake. It's that we do so many transactions in a day that your account might be negative $35 or $50 from your own transactions, but $200 in fees.
Yeah.
And that's where it really gets scary and really puts people in a hole where if you're on a limited income, how do I make up $200 in fees?
And so a lot of folks then don't pay those fees, lose their checking account, and then they get entered into what's called the check system, which is like a credit reporting system that maintains a database of people who have had their checking accounts closed for reasons like that, and then those folks can't get checking accounts typically until they've paid off that debt. So for the average person who has a low income and a sporadic income, isn't it smarter to say to get the kind of account where you can't overdraft it, where it just gets, where you get turned down if you're trying to overdraft it? It seems like people are spending so much money on those overdraft fees. Shouldn't they just choose a version where that won't happen? Or do you think there's a compelling reason to allow overdrafts to go through?
It's up to each individual, and I try and walk through this with every single person who opens up an account. I'll give you an example of just yesterday. We had 2 new accounts that I opened, and one person said, of course not, of course decline it. Like, why would I ever want to pay this? This sounds like a terrible thing. Thank you for offering. I never want you to approve that. If I don't have money in my checking account, don't let it go through.
Yeah.
Second person says, I have a newborn baby, I have a limited income, and if I need to go to the store and I need to buy baby food or formula, I don't care how much money's in my account, I don't care what the fee is, I want to feed my baby. And so, for that person, the convenience of the flexibility of being able to buy things even when you don't have money at that time vastly outweighs the fee.
Yeah. So people are using overdrafts as high-priced credit
Yes.
for typically smaller purchases. So let's transition into the world of credit then, and perhaps an even bigger problem, certainly a very big problem, other than not having a checking account and relying on check cashing services and money orders and whatnot, is not having good access to credit and relying on things like rent-to-own stores or payday loans or pawn shops to get access to capital when you don't have it. Whether it's an unanticipated expense or whatever, you've got a short-term need, you need $500, $1,000, and you don't have it, and so you do something like that. What are some realistic options that folks like that have? How could a credit union maybe help them?
Yeah, the first thing I always recommend people is think about credit when you don't need it. Because when you don't need it, that's when you can set yourself up for in times when you do need it. Unfortunately, in most cases, when you do need credit, it's when you're in the worst position to apply for it, right? Maybe you've lost your job, or you've had, a divorce, or things have come up in your life which have hurt your credit score. You've missed other bills, and so on paper, when a bank or credit union looks at it and says, "Okay, you haven't paid these 3 other people. What makes me think I should now lend you money? Well, why would I'm just going to be the 4th person you didn't pay." So, the easiest way to do it is to think about it before it comes up, and that's why I say know the person at the bank or the credit union, ask them what's available, build those relationships, establish your ability to access credit, to plan for these unforeseen instances. Build your own, build savings in your savings account. Ask your bank or credit union, what are the options. We have things called credit builder loans, where instead of having to take on debt to build credit, we want to establish a savings plan and build credit at the same time. So we do a type of loan we call the credit builder loan. Everybody's approved. There's no underwriting or credit score requirements. Let's say we give you a loan for $500. We take the proceeds of that loan, put it in your savings account, lock it up. We say, all right, over the next 6 months, the payments come out to about $85. We can change the payment amounts for whatever their income requirements are. Let's say you pay about $85 a month over the next 6 months. We record each month as a loan payment on time to start establishing credit with us and with the credit bureaus. And then at the end of 6 months, you not only have established credit, build a repayment history, you also have $500 in your savings account. So you're now financially ahead versus most standard advice for building credit is go take out a credit card. So then you take out a credit card, probably has a high annual fee of at least $25 up to $50 or $75, a high interest rate. And then the advice is also, you have to carry a balance on the credit card in order to build your credit, which is also false. So then you end up paying annual fees, paying interest, carrying a balance, and carrying a balance on your credit card will actually hurt your credit score. So then you actually don't have as high as a credit score as you could, and you actually end up being behind. And then this turns into a cycle where your credit doesn't go up. So you go onto Credit Karma or Capital One or some other online advice, and what do they tell you the solution is? Take out another credit card or take out another loan. And so you end up putting yourself in a worse situation in order to try and build your credit.
All right. We are running out of time. Time flies when you're talking about money. I want to urge our listeners to check out the Good Neighbors Credit Union, really a wonderful institution. go and see James at the Connecticut Street branch and find out more about what they can do for you. Next week on The Public Good, we'll be talking with students from Cornell University's High Road Fellowship Program and talking about the work they've been doing this summer.